All right, welcome back to TV5 News at 9. Joining us this morning, we have Eric Burnett from United Financial Credit Union. Eric, good morning. Thank you so much for being here. How are you?
Good. How are you doing?
Doing well. Thanks for calling in and being here. So today we're talking about mortgage lending. So we'll get right into it. Eric, why should someone get pre-approved for a mortgage?
Well, in this market here, you got to find out what you can afford. We know the real estate market has been crazy for the last couple of years. So realtors are going to want to make sure that you're pre-approved so that you're not wasting their time, wasting the seller's time. So we recommend that you get pre-approved, see how much you would qualify for, and also to make sure that you actually do qualify for a mortgage.
Very good. What do our viewers need to do in order to get pre-approved?
It's a pretty simple process. If you work where you get paid hourly or you're salaried, we're going to be looking for a month's pay stubs, your last year's W-2, and 2 months bank statements. The only way that would change is if you're self-employed or if you have multiple properties where you've maybe been renting them out, then we would need to see the last 2 years' tax returns.
All right, seems pretty straightforward and simple, but what if someone doesn't qualify, Eric? What can they do then?
Well, there's a couple things that we can look at there. If they have limited credit, that's okay. We may need to have you build up credit for a little bit just so that we can get you qualified. If you've got bad credit, more than likely it's going to take a little bit longer to get qualified. You'll have to pay off some debts or collections. If you don't have credit, though, we can work with that. We've got some options here at United Financial Credit Union. We offer credit cards, credit builder loans. We even offer debt consolidation loans to help people out with their credit cards or the amount of credit they have. So there's a lot of options we offer here, and we'll work with our consumer loan department to get you set up so that down the road you can get into a house for yourself.
Very good. Working for the people. I like it. So, Eric, what types of loans are out there for our first-time home buyers?
First-time home buyers have got a number of options. The first one has been around for about 25, 30 years. It's the United States Department of Agriculture, what they call a rural development loan. It doesn't necessarily work in the cities like Bay City, Saginaw, Flint, but if you're out in the townships or the rural areas, you very well could qualify for that for zero down. The other options kind of go in order. If you're a veteran, the VA loan is a great option for you. You get in for no money down, 30-year fixed. Conventional will be your next option at 3% down. Again, you could get into a 30-year fixed with that. And depending on credit, debt ratios and stuff like that, FHA is the other possibility. That requires 3.5% down. But FHA sometimes is the option to go because of credit scores, debt ratios. They're a little bit more forgiving on that for first-time home buyers.
All right, Eric, so what should someone do once they are pre-approved?
Well, what we want you to do over the past few years, it's something that's worked really well for us. Do not change your jobs. As much as it may pain you to stay there, stay at your job till you get the loan closed. Don't make any large purchases. Do not go out and buy a car, big flat screen TV for your new house. Hold off on those until after you close. Don't change your accounts where you bank at now. Stay with the bank or the credit union that you're at. It's just going to cause a lot of headaches there. Same thing with large deposits. We don't want to have you document a bunch of stuff just because you put large deposits in recently. Don't make any new inquiries into your credit score. As tempting as it is to go to Kohl's and save 20% on a purchase, like $500 or more, don't do that till after we close. Keep your credit card balances around where they're at now. With the price of gas going up the way it is, let's do our best to do that. Don't co-sign for anyone. If they ask you to, tell them you've got to wait until your house is closed. And then the last thing is the money that you've saved up for the transaction, whether it's your down payment, your closing cost, or both. Keep those, don't spend them. Just because we pre-approved you with that, you've still got to show up to closing. So even though it might be tempting to go on a vacation for spring break, if you don't have the extra money, don't do it.
All right, some great tips, great reminders, and it sounds like you need patience and willpower in this case, Eric.
Definitely.
All right, so before we go, anything else you want us to know about mortgage lending or United Financial?
At United Financial Credit Union, we've been here for 60 years. We're here to help you get into a better financial situation. It's always better to try and own a home versus renting, so we're going to do our best to help you. If we do have to use our consumer lending department to help out, we will utilize that. But if you are interested in talking more either to myself or anyone in the mortgage department, you can go on our website at www.unitedfinancialcu.org. You can apply there, you can send us a message, or you can call us directly at 989-777-3620. Thank you.
Very good. All right, Eric, thank you for all your knowledge and calling in this morning.
No problem. Thank you.
Of course. And for those of you at home, you can find more information in the hot link section on our website, WNEM.com.